Hey, future CPAs, welcome to your ultimate LCPA study hack. I know intangible assets can feel super tricky when you're studying, but don't worry, we're about to break it all down and make it make sense. Let's get right into it.
So think about it. Patents, copyrights, franchises. For each of these, there's always that one rule the exam just loves to trip you up on. What is it? Well, stick around because by the end of this, you're going to know them by heart. Ready? Let's go.
All right, first things first, we're going to start with the absolute basics, stuff you probably already know. Think of this as our solid ground before we jump into the more complicated parts.
This is pretty much the golden rule, right? You get an intangible asset, you record its cost, that's capitalization. Then you spread that cost as an expense over its useful life, that's amortization. This is the core idea that everything else is built on.
And yeah, that whole process of spreading the cost out, that's just amortization. It's basically depreciation, but for intangibles. Simple enough. Okay, foundation's set. Now for the fun stuff. The details that are actually going to get you those crucial points on the exam.
First up, patents. And this is where we hit our first major rule. It's kind of like a showdown between two different time periods.
Okay, so here in the Philippines, the law, that's Republic Act 8293 if you're curious, says a patent's legal life is a solid 20 years from the day you file it. 20 years. Burn that number into your brain. But here's the twist. Just because the law gives you 20 years of protection doesn't mean the patent is actually useful for that long. I mean, think about it. Your phone's technology is practically ancient news in like 3 to 5 years, right? That shorter time is its useful life. So you have the legal life of 20 years versus a much shorter useful life. So which one do we use? And here it is. This is the hack you absolutely need to remember. The rule is simple. You amortize over its legal life or its useful life, whichever is shorter. That's it. The board exam will totally try to trick you by giving you both numbers. Don't fall for it. Always, always, always pick the shorter one. Okay, amortization. Check. But patents have another trap waiting for you. This is probably the #1 mistake I see students make, and it's all about one specific cost that just breaks all the normal rules. So picture this. Your company successfully sues a competitor for copying your patent. You've got all these legal fees. What do? Your accounting brain is probably screaming, capitalize it. It's a cost to defend the asset. And honestly, it makes logical sense. But it's wrong. The answer is a hard no. You expense it immediately. According to Philippine accounting standards, legal fees from successfully defending a patent are not added to its cost. You have to charge them as an outright expense in the period you incurred them. Seriously, this is like a free point on the exam if you just remember this one thing. And because our brains are usually fried from studying, here's a super simple hack to remember it. Just repeat this to yourself. Defend the patent right, expense it outright. It's a little cheesy, I know, but I promise when you're stressed out during the exam, this little rhyme is going to be a lifesaver. Okay, let's move on. Let's talk about franchises. Think about your favorite fast food chain or that go-to coffee shop. With these, the accounting gets interesting because it can go one of two very different ways, and it all comes down to the contract. This is actually super straightforward when you see it side by side. If the franchise agreement has an end date, let's say it's good for 10 years, it has a finite life. You amortize it over those 10 years. Simple. But if the contract can be renewed indefinitely for little to no cost, it's considered to have an indefinite life. And for those, you do not amortize. Instead, you just test it for impairment every single year to see if its value has dropped. 2 timelines, 2 totally different rules.
All right, deep breath. We've covered the core rules and the biggest twists. Now let's cram it all into one ultimate cheat sheet. This is the slide you'll want to mentally picture right before you walk into that exam room.
Let's do a rapid-fire review. For patents, amortize over legal life or useful life, whichever is shorter. For patent defense, if you win the case, you expense it immediately. For a franchise with a finite or limited life, you amortize it. And for a franchise with an indefinite life, you do not amortize, but you test for impairment. Boom. These points are your key to acing this topic.
And that's it. You now have the essential rules and the study hacks to tackle these intangible assets with total confidence. You know the twists, you know the traps, and you know the logic. Now go out there and absolutely crush that exam. You've got this.